What's going on, everybody? Just verifying that we are live. So, we're going to be covering a couple of different stocks today. Obviously, we talk about NIO on the channel pretty often, but we're going to talk about some of our other favorite stocks in conjunction with NIO. And today, I want to start off with a stock that has just been tumbling, right? So, we're going to start with MicroStrategy. Now, MicroStrategy is a company that invests primarily into Bitcoin, right? So it started off as a company, a tech-based company, and now it's kind of moved on to investing into Bitcoin. Now, right now, we can see the price is $133.38. The question is, do I think this thing is do I think that it's time to start buying now? So well, you got to think about Bitcoin. Now, a lot of people buy stocks like MicroStrategy and some of the other Bitcoin mining stocks as a substitute for having to actually purchase Bitcoin on an exchange that they're probably not comfortable with, or for whatever reason, right? You can think about Mara, you can think about Riot, you can think about HUD mining. It's all kind of in the same alignment, right? But MicroStrategy, with them primarily putting all of their funds into Bitcoin, the price is reflecting that. So if we look at the all-time high, for example, right? This thing, it looks like at one point it touched $543, and now it's at $133.53. So this thing is well over what, 80% off, if not close to that. So do I think it's a good time to start buying now? I would say, for me, if it were me, I would be buying a little bit at a time. Even looking at this chart here. And the reason why I say a little bit, I'm talking very, very small. When Bitcoin gets to 50,000 or below is when I would start to really kind of go in on MicroStrategy. Until then, I wouldn't be going all in, but that's just me. That's my personal opinion. I'm not giving financial advice. Okay. So for those of you that are looking, we're going to get into NIO, SoFi, Palantir. We're going to get into all of that in a little bit. Okay. But we're talking about MicroStrategy, right? Now, MicroStrategy also has a leverage ETF, right? There's one called MSTX. So if you're a person that really likes to I could say this two different ways. If you're a person that likes to bet big, or you're a person that likes to be more risky with their investing, then MSTX is also another option for Bitcoin, which tracks MicroStrategy, but to an entirely higher level. So let's check that out. So if you look at MSTX right now, we're sitting at $2.48. Now, the thing that worries me about MSTX is I don't know if this thing will go to zero or not, and if we got to zero, would there be some sort of stock split that happens? Um, would this ETL completely go away? That's one thing that worries me about MSTX. Now, when we talk about MicroStrategy itself, we know that it's got a track record. When we talk about Mara, Riot, HUD mining, we know that they all have a track record. But once you start going to these leverage stocks, it kind of starts to scare me, because look at this thing. At one point, it was at $160.86, and that was back on, it looks like November of 2024. And look where we are now. So if we look at what we were in the summer, it looks like we're around $32. Now, if you have faith that MSTX, which tracks MSTR, will be around for a while, then this could be an opportunity. But for me, when I've dealt with MSTX, it was in the same day. I'm in and out in the same day. And not only that, if I go long on it within that same day, I'm hedging with a put, or if I'm buying 100 shares at a time, I'm selling covered calls as well. If if that's what needs to be done, because you get into something like this, you have to be very, very cautious. Okay, so overall, MicroStrategy, I think, is a good time to start nibbling, as they say, but going all in, I don't think so. I think that if and when we actually hit a crypto winter, this thing is going to go down pretty significantly, starting with Bitcoin, right? So at 50,000 or below, I will start to go in. Okay, so that's what we are with MicroStrategy for me. Now let's move on to SoFi. Now SoFi is in a weird place right now because they're coming off of fantastic earnings. They had record breaking revenue, which I think was $1 billion for the quarter. And we've got some more information out about SoFi today, but I am still someone that says that SoFi's price does not reflect its actual valuation. But hey, who puts the who makes the price what it is? It's the investors, right? So a lot of you will say, yeah, it's the whales, it's whoever. But a stock price is going to be what people are willing to pay at a particular time. And this is simply what we are with SoFi. Now, just less than a week ago, we saw SoFi hit $18.34, which was crazy because within that same week, I think it popped up to $26. Now we're sitting at $21.25. So let's talk about what's going on with them right now. So there's a headline that says this. Um, SoFi stock slips ahead of Robinhood earnings, and then it says what to know. Okay, now we'll talk about that in a second. But there's also another one that says SoFi expands into crypto with SoFi USD to grow fee based business. Now, do you think that this would give SoFi more value? Right, that's the question. So I think that it gives people an opportunity to use crypto, but not necessarily in the way that it was intended. Because when you think about how crypto was when it initially came out, there was this whole privacy aspect to it. We didn't, want banks and the government tracking what we were spending our money on, and we didn't want to be tracked transferring money from one entity to another. And yes, in some aspects that has bitten a lot of people on their rear, and that just comes with it, right? No matter what financial industry you're a part of, there's going to be some kind of scheming and scamming going on, and crypto is no exception. Okay, so this thing says this. It says SoFi has launched SoFi Crypto, offering in-house crypto trading to its members. The company introduced SoFi USD, a fully reserved stablecoin designed to support payments and digital asset transactions. SoFi, a federally chartered FDIC insured bank, is providing infrastructure for banks, fintechs, and enterprises to use SoFi USD. So, what does that say to me? That says that there's going to be competition for PayPal, there's going to be competition for Visa, MasterCard, and then I would say there's going to be competition for XRP, although a lot of you probably would disagree. But one thing you have to remember is SoFi already has its foot in the banking door, right? The governments trust SoFi, institutions trust SoFi, investors trust SoFi, consumers trust SoFi. I listen. I like XRP, but we just haven't gotten there yet as far as trust, right? We still have a ways to go. Now, it also says that SoFi is best known for its digital banking, lending, and investing platform, and is pushing deeper into digital assets through SoFi Crypto and SoFi USD. So, for you as an investor, this means the business is expanding beyond its core of loans, deposits, and brokerage into a platform, crypto trading, and blockchain based payment rails. The move could allow SoFi to participate in demand for regulated access to crypto and stablecoins, an area many traditional banks have approached cautiously. As this develops, you may want to watch for how SoFi integrates SoFi USD across its products, how partners adopted stablecoin infrastructure, and how regulators respond to a bank operated stablecoin model. Okay, so I think that SoFi is going to be the poster child for success when it comes to implementing this infrastructure, right? Because everybody's coming out with a coin, everybody's got a crypto, right? And so we know that I'm not going to say it doesn't take much effort, but it doesn't take long for someone to come out with a cryptocurrency and launch it pretty quickly, right? So we understand that. Now, let's talk about this. It says SoFi stock slips ahead of Robinhood earnings. What to know? So it says SoFi is trading marginally lower Tuesday afternoon, dropping despite a lack of fresh company specific headlines after a volatile stretch over the past 2 weeks. Right. So we all know what happened over the last couple of weeks. Interest rates had no change. We had a new Fed that was announced that's going to start, I want to say in April or May. The market factored that in. And because the new Fed chair has traditionally been hawkish, guess what? Anything associated to that, including SoFi, Robinhood, any other fintech out there, has taken a beating, right? So I expect all of them to make a rebound, but we know that Robinhood's got other things going on as well. So let's dive a little bit deeper. Now, SoFi um, had an earnings beat, guidance sparked volatility Tuesday. Tuesday's pullback follows a late January earnings beat in which the fintech reported fourth quarter earnings of 13 cents per share, topping Wall Street's 12-cent consensus, while revenue climbed about $247 million year over year. Okay. Now, the strong guide initially sent shares sharply higher before profit taking set in and the stock gave back a chunk of its post earnings surge. I don't think that was profit sharing, profit taking. I think that was people spooked out of their mind because of what happened that week, the economic data, the the Fed, the no interest rate. I mean, there was a lot going on. There was tariff threats. There was all kind of things happening that week. Okay, so it says this. Why Robinhood earnings matter for SoFi stock. So it says traders and investors are now watching Robinhood's market after the bell Tuesday for clues about the broader app-based trading and digital banking backdrop. Both platforms target similar digital native retail investors and generate revenue from investing, cash management, and crypto. Now, do you see the story here? If things don't go to par with Robinhood, guess what? They're gonna link that back to SoFi too. It's a possibility. So I'm gonna be watching Robinhood, but I'm also gonna be watching to see if there's gonna be some opportunity after the bell today. So as of right now, we got about 4 minutes until the bell is gonna go off to end off the day. Okay. Now it says this. Strong Robinhood numbers on consumer growth, trading activity, or cash balances could reinforce the bullish case for SoFi's own investing in banking franchises, while weaker metrics might pressure sentiment across the fintech peer group, even without a new SoFi news. Technical pictures are mixed for SoFi, and technical indicators reveal that SoFi is currently trading 12.4% below its 20-day simple moving average and 21.8% below its 100-day, showcasing a challenging short-term outlook. However, shares have increased 40.69% over the past 12 months, positioning them closer to their 52-week high. Okay, so there's a lot going on there, right? There's a lot to unpack, but I'll say this: you heard it here first. If SoFi takes a hit after the bill, you know why. This they're trying to link it to Robinhood. They're trying to beat these stock prices down as low as they can get them. That way, they can swoop in and get them for a better price, right? So you got to be aware and cautious of what's going on and pay attention to what they're telling you. Now, they may also be telling you this so you can get rid of your shares, for you to get rid of the great position you're in now, and you got to be patient, right? So just be patient, okay? Now, let's talk about let's talk about Palantir before we get into NIO, okay? Now, Palantir has also been taking a beating. Also, another company that's had great earnings, right? And you can see at one point this thing was at $207.52, give or take, depending on what brokerage you've been in. But look at the price, $139, which is about what 40-ish% off its all time high, if not more than that. And so these are the times that I've noticed newer investors, I'm not even gonna say new investors, that investors that have not had success, these are the traps that they find themselves into, right? So you got a stock that's 35-40% off its all-time high, and nobody's buying it because there's no hype surrounding it and it's not going to the moon right now. So this is the time you want to start to accumulate this, right? Not when it gets to $196, not when it's at 207. Now, although I do think when it moves, this next time is going to go blow past $207. Why not start investing now? Why not start dollar cost averaging now? Right? It only makes sense. So let's talk about what's been going on. Okay. So there's an article that says this: what's wrong with Palantir technology stock? There's nothing wrong with it. So it says this: key points. Palantir stock is priced for perfection, which can make it difficult for it to woo investors. Mm-mm. Investors have pivoted away from expensive and risky stocks this year in search of safety and stability. Mm-mm. If you believe that, you believe it. But let's go ahead and break this down. It says, as of Monday's close, the data analytics stock has fallen by 20%, while the stock market has been in a bit of a shank. What may be puzzling to Palantir investors is that it's doing so poorly, even as a company posted strong quarterly results. Yet again, why is the stock struggling? And what does this mean for investors? So it says where to invest $1,000 right now. Our analyst team just revealed they believe are the 10 stocks, and we'll get into that later. But it says Palantir's strong results may already be priced into its valuation. I don't believe that. It says when Palantir released its latest quarterly numbers earlier this month, it was what investors and analysts have come to expect from the stock by now. Another solid earnings beat and promising guidance. It beat on the top and bottom lines. His guidance was higher than what analysts expected, and CEO Alex Karp yet again pumped up the results, calling the undisputedly the best results that I'm aware of in tech in the last decade. It says, now the trouble is that may already be what investors have come to expect from the tech stock. It is, after all, priced a whopping 216 times its trailing earnings, a steep valuation by any stretch for the kind of premium investors arguably are already expect the company to continually beat. Then it says, is there simply less appetite for risk in the markets? Okay. Now it goes on and on. Here's what I have to say about that. I think that people have started to take profits, but I don't think that's the reason why the stock is down. I believe this stock is down because it's going to present a better opportunity for the whales later down the road. And so, what you'll see happen, maybe you may see them beat this thing down to 110, maybe even $90. Now, at those particular points is when I would probably estimate there's gonna be some heavy buying before we blow past 207. So you gotta think a lot of these whales, they want to have control, right? So if they want to get in at $100 or $90 and they want to be at 120, they have their wiggle room. They're not going to buy this thing when they know that it's got a little bit more room to go to the downside. Now, I can't personally make Palantir shoot to the moon. Probably most people that are listening to me can't either. uh, a company as big as SoFi probably can invest in Palantir and make it go back to $200. So you kind of get the gist here. There's going to be a collection of different whales that make an agreement to turn the ringers back on to get this thing back up and running. And so far, it's not that time. So when we look at the chart, even here, we're at we're at prices that we haven't seen since the summertime, right? So all of this area right here is basically fall and winter. I still think there's gonna be some room to fall to the downside, maybe as low as, like I said, about $90. And at that particular point, I think the ringers will be back on. There'll be some heavier buying. Now, one thing you have to realize, guys, just a year ago, look where we were a year ago. A year ago, what is this? 20 February the 7th. Look at this. Just a year ago, we were at $80. We're still up nearly double where this price was a year ago. So a lot of people are upset because of where the price is now. But when you look at where we came from a year ago, this thing is still up pretty significantly. Even if it would have fall to $100, it's still up. So that's one thing we have to keep in mind. These stocks are not going to run to the moon forever. There's going to be some pullbacks. So we just gotta remember that. We have to remember that. Okay. Now it also ends by saying this. It says, not only is Palantir down big this year, but leading cryptocurrency Bitcoin is also down around 20%, which we spoke about that earlier. If you look at going back to the summer, it's down way more than 20%. But they want to keep your mind short term. Only look back the last 30 days. Only look back to the past 60 days. Not looking at the full spectrum, because if you look at where it was at 30 days ago, we can come in and step in and buy more Bitcoin while you're sitting there waiting to see what's going to happen. So start to pay attention to these things. Okay. Now, let's talk about NIO. All right. NIO has been having a pretty decent week, I would say. So if we look at the 5-minute, it looks like we touched that 5-minute mark, $5 mark again, and then kind of sold off towards the end of the day. But the stock still closed up 1.5%, give or take, right? We're in the aftermarket now is went down about a cent and a half or so. And so let's talk about what's going on with NIO. Okay. Now, NIO has had a lot of news that came out over the last couple of days, and we spoke about a lot yesterday. But let's go ahead and talk about what else has been happening since yesterday. So, yesterday, we know that there was talk about the NIO phone, there was talk about the battery swapping, there was talk about what to expect as it pertains to swap stations. So they're planning on adding 1,000 swap stations. And to the bad news yesterday was there was a recall for 246,000 cars. Now, there was an article that came out that says this. It says, is NIO fairly priced after recent share price recovery? Which is the question. So it says, if you are wondering whether NIO at about $4.89 is a bargain or a value trap, you are not alone. This breakdown here is to unpack the question in more detail. It says the share price has moved 8.2% over the last week and 5.4% over the last 30 days. While the year to date return is a 4.9% decline and a 1 year return sits at 12.9%, this compares with much weaker 3 year and 5 year returns of 52.6% and 91.8% declines, respectively. Now it says recent coverage of NIO has focused on its position in the electric vehicle space and investor interest around its abilities to sustain operations and fund future growth. This is set against a backdrop of intense competition and changing sentiment toward high growth auto names. These themes have helped frame how the market is reacting to NIO's share price moves and what makers are watching most closely. Right now, NIO has a valuation score of 2 out of 6, meaning it screens as undervalued of 2 out of 6 key checks. Next, we look at how different valuation methods line up on the stock before finishing with a way to think about value that goes beyond the usual numbers. Okay, so here's what I have to say about that. And you guys know that I'm a long term bull when it comes to NIO, but we have to be honest here. If you're not profitable, which we all know that there's supposed to be profitability proven, that's going to be proven in this next earnings. But if you're not profitable, you're not really selling investors much, right? Especially when you think about investors that aren't the investors of yesteryear. The investors now are much more inclined to wanting instant gratification. And so you got investors that aren't willing to hold a stock more than 3 months, 6 months, a year. Um, if you ask a lot of younger investors, the majority of them wouldn't hold a stock for 2 years. So not only once they prove that they're profitable, I think now is it going to be sustained? And I've spoken about this on previous videos. We're past the we're past can you be profitable? Okay, now we know you're profitable. We haven't seen the numbers yet, but once we see the numbers, what are they going to reveal? What kind of margin are we talking about as it pertains to being profitable? And if let's say you're making 5, 10, 15% on each vehicle, how long can that be sustained? What's the future forecast to make even more, or is that going to remain the same? Is 10% of each vehicle, is that going to be sustainable to grow the company, to invest more in the company? to advertise to potential consumers. So we got to start looking at those different numbers. And for me, I think the company can do that, right? And that's why I continue to buy under $5. I continue to go heavier when it goes under $4 because I know it's a matter of time. Like, it'll be a blink of an eye when this thing goes from 5 to 40. Like, it'll be that quick. I'm telling you. So we just got to continue to be patient. And I know I've said that a million times. You got to continue to be patient. But this earnings isn't going to be, that's next month, isn't going to be just about the profitability. It's going to be what's the next quarter going to be? In the next quarter, what's next year going to be? Like, we want to know, what are you going to do to be profitable from here on out? We don't want to see just one profitable quarter and then now we're back to not being profitable. Then a profitable quarter, then we're not profitable. Then a profitable quarter, then, we don't want to see that. We want to see a steady, gradual increase quarter after quarter. And that's when I believe investors will step in like they were before. Okay. So overall, guys, we spoke about many different stocks, and we're going to end with Rocket Lab. Okay. Rocket Lab today looks like it gave us a bit of a discount, and I like the company. Um, we've seen this thing run up to about $100 or so, give or take, depending on the brokerage that you're a part of. And right now, we're right where we, I'm not gonna say should be, but according to history, this looks to be a good pullback. So now, where do we go from here? Right? Do we go back and retrace? If we go back and retrace and we hit $100, if we get rejected, that could be bad, and then we can come back down to $62. Okay, so we do not want to form a double top here because that may not be good. Okay, so I'd rather see us come back to 62, get a little bit of establishment momentum, and then work our way maybe to 120, 130. But we're kind of in a weird place right now. I will say this. You guys know me. For me personally, to start to really accumulate on the stock, it's got to be 10% off its all-time high. This thing is nearly 30% off its all-time high. But you have to remember, the stock is very volatile. What the stock does is very meaningful, but will it be able to compete with other companies that are going to come out? If a company like Tesla decided to step into this space, will they be able to sustain what they're doing and take things to another level? Right? These are some of the questions we have to answer when there's a device or of some sort being tested by the company and it fails. What's going to be the game plan to go forward? So these are the things that we have to look at when it comes to Rocket Lab. Now let's go ahead and talk about some of the things that have been happening with the company. So there's an article that says this: Rocket Lab stock slips, but fueling the move. So again, we're down decently today, 5%, which is not a lot for Rocket Lab. But if we're talking Apple or something like that, that might be a lot. But here's what's going on. Rocket Lab shares are experiencing downward pressure. SpaceX IPO rotation hits space stocks. Rocket Lab shares have been volatile in recent sessions, driven largely by Congress' decision to withhold funding for a planned 2031 Mars sample return mission and overhang that had already been pressuring the stock in recent sessions. The funding setback has become a key swing factor, prompting investors to recalibrate expectation for the company's longer term opportunity set. Now, at the same time, around a potential SpaceX IPO rumored to be valued above 1.5 trillion is weighing on publicly traded space names as investors reposition ahead of any possible listing. So here we are. Here's competition. Uh, this SpaceX, I believe, is one of Elon Musk's companies, and so yeah, there's that tie to Tesla, man. Although it's separate, it still has dealings with Tesla, even as we think about it from a name perspective. So it's just crazy, when we think about what to expect from the government when it pertains to funding and how quickly things can change just because of something that's tied to a person that has a name. It's crazy, isn't it? Now it says this. Instead of adding exposure to existing stocks, traders are potentially taking profits from 2025's rally and shifting into a wait and see posture, potentially preserving capital for a future SpaceX offering. Now, that rotation has contributed to double digit pullbacks across several launch and satellite peers in recent weeks, adding incremental pressure to Rocket Lab shares. Now, Rocket Lab drops amid mixed signals. Despite a generally positive market day, Rocket Lab's performance suggests company specific concerns may be at play. The stock's downward movement comes as investors digest recent technical indicators and market sentiment. So I think it is about the I do think it's about this Congress decision to withhold funding for a planned 2031 Mars sample return. But this could be one of those situations where it's on again, off again. It's on, then it's off. It's on, then it's off. And so if there's any notion that Congress is going to be providing this funding of any amount, I think that can kind of set Rocket Lab back to where it was. Now getting past $100 is gonna have to be more. It's gonna have to be more from Rocket Lab, right? So honestly, I could see somebody buying Rocket Lab out. Um, the company right now has a market cap of $38.4 billion. It would be nothing for one of these cash cow companies to come in and buy Rocket Lab. Now that could be wishful thinking, but I think it's a possibility. Um, I'm not gonna say Amazon or something like. I wouldn't be. Listen, Amazon's got their hand into everything, don't they? I mean, anything you can think of, grocery store, like the companies that they own. I've been learning this year. It's just been crazy, but yeah, they're gonna have to do uh, a little bit more outside of what they're doing to get this thing to move back up. Maybe some more deals, finding another alternate routes to get funding. But I think ultimately somebody buying them out would really get that price up well above $100. Okay, so ultimately, guys, we've covered everything I wanted to cover today. I think I'm gonna start doing it this way because you guys know, man, I got a big family. I got a family of six. A lot goes on in the morning, a lot goes on in the afternoon, a lot goes on in the evening. Like this evening, my oldest son has a wrestling match. That's gonna be, a couple of hours. Uh Tomorrow, the two younger ones have swimming. So yeah, busy life, man. Busy life. So let me know what you guys think about the state of Palantir, Rocket Lab, NIO, SoFi, Palantir, MicroStrategy. Let me know what you guys think. All right. I appreciate you guys for watching with me, and we're out, guys. Peace.